Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, and let's make it a great 2014, folks. Remember, yesterday's gone. Tomorrow's not here. What are you doing right now? Let's kick it off with one of our 4 agreements. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. And every kiss and every touch, you feel there to please the one you love without expecting anything back. You have each other. That's the bottom line, baby. Market-wise, let's take a look at it out here. We had the Dow Industrials up 72, NASDAQ up 22, S&P's up 11, gold contract flat at $1,204 an ounce. Silver down 11 cents at $19.50 an ounce. Platinum up 12 bucks at $1,370 an ounce. Copper up a penny at $3.39 a pound. Light sweet crude off 67 cents, trading out at $98.62 a barrel. 10-year bond down 12 ticks at 122.27. You get the 30-year down 26 ticks at 127.31. King dollar up 163 ticks at 80.25. Euro at 137, and the yen is up 15, trading at 105.35. My phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? The last trading day of the year, you close at highs. You're at 1849.11. We go take a look at the SPY, see what you have out here. We did 77 million shares. Bottom line, it closed at the highs, folks. That's what it comes down to. Dow Industrials. We go over to the Dow. We take a look at the Dow Industrials. That closed at the high. That is at 16,576. And that last expansion, meaning just from 10 days ago, we just gone up 900 points. We let's see. The 12th, we're at 1570. NASDAQ Composite. Composite out here, she is at 4176. That little baby also is at a high. We did 561 million shares in the NYSE. We did 1.3 million in the composite. You talk about moving markets around a little, folks. About 20 minutes before the close out here, you had the S&Ps move up about $7, move back down $4, and move right back up there $7. Okay, gold market. Let me tell you something, folks. It doesn't get any better, okay? You know, we've been talking about that low, that June 28th low, and this is what we had out here today in gold. This is the last day of selling. Well, this is the last day of tax selling, okay? Gold has been down for almost 2.5 years. You know, we got to a price point today of 1181.40, and it was so sweet. It was amazing, folks. So what it did is this. As it slammed down, and first off, you know, coming into the last day of the year, you've got to expect that that was going to go after those lows again. Bottom line, it goes after the lows. Not only goes after the lows, but when it went after the lows, folks, what you had is this. None of the gold equities or silver equities, they were all flat. It was wild watching this thing shake out, okay? So that's, you know, that was prior to the open. The first acceleration down was at 8:40 Eastern Standard Time. Hung down there until 9:40, market opened, and let me tell you something, you know, there's no doubt that traders start figuring out like, oh, really? Gold's down $17, it's hitting a low, and the equities aren't moving? See ya, don't want to be ya. Gold market reversed, took off. We're at 1205 right now, and I still want to see it at the 1231.60 level. But that's a good level. And what that is, that's over the June 28th level. But bottom line, what I expect you're going to see in 2014, because of the bearishness that's in that market right now. Well, here I'm going to go through the whole. I want to go through the whole thing with you, actually. So the gold market in particular, folks. Okay, and this is a gift from the gold trading gods that we all pray to every night. I'm only kidding, but bottom line, folks. Okay, here you go. If we bring gold back. This is so classic. It's unbelievable, folks. And this is what it is. The correlation. If you have my book, The Art of Time in the Trade, you know that when you do a to B equals C to D, and you do a 1.618 or more, it's an immediate reversal in the marketplace. That's the first part. Well, the last expansion up in gold, that's exactly what we had done. It was a 1 to 1.618 ABC structure on the way up. That's the first part. So, you know, we went from a price point, you know, basically blasted up to $1,920. Now, up at those levels, Fibonacci-wise, is like, that's trouble. That's the first part. Second part, folks, guess what? At those levels, we had no volume. But now I'll do something for you. I'm going to put the GLD up so you can see this whole correlation, okay? So the reason I'm putting the GLD up is that you'll be able to track it on your own computers over the weekend or whatever you want to do as you're kicking off the new year. So if we put the GLD up, and I put the volume characteristic with it, you're going to see, well, first off, if you do an ABC structure on the up, you take the B out, you take it out with volume, you're going to get the price projection. In this particular case, we not only got a price projection, it went too far. When it goes too far, it blows up the market, and it blows it up. And this is, when you go down, it does the same thing. Well, check it out. What was happening there, once it happened, is that the last time that we had good volume, okay, was in the end of 29 and 2010. That's where it was. That's where the market wanted to come back to. Well, guess what? The market came all the way back to that level. It took 2 years to get back there. Well, 1 year and 8 months, first low. It was established. It got done. June, it hit it. You have an expansion off that level. Guess what? We come back again, come into it again. My take in that market right now is that we get a second low in, and because of the way it reacted, today couldn't have been any better, meaning that you have the last day that you can do tax selling. You have all of the above. The equities didn't go down. 2014, what you're going to see, and by the way, when we came into those lows from 2010, the correlation is 254 million into 500 million. So you come in there with 50% lighter volume. And the larger correlation. 2014, folks, gold, silver are going to be the Rocky Balboa of the market. It's going to be a trip watching this whole thing play out because the bearishness is there enough. The destruction was there enough. It's all there. And it doesn't mean I'm not saying gold's going to go right back to 1900. But what you will see, we are at the price point out here of 1205. You're talking 1600. Well, here, let's go right through I'll give you these numbers on the way up. So, GC, when we go through this baby, this is what you have. Your first correlation, which I think, you know, we're going to get quicker than most folks think, is that you're going to get into about 1362. At 1362, if that's going like I think it's going to go, meaning wide price spread, accelerated volume very quickly, you're going to be at the 1450 before people know what just happened. And when I say quickly, that's like 3 months or something. And how we do that is crucial to is going to tell us how much further that market can go. Because if I take this now and I put it on a continuous contract, this is what you have. And I put this, I'm going to bring it back 3 years. What you'll actually, no, I'm going to bring it back. Okay, so if I put it on a continuous contract, what you're going to see is that once you make it up to the 1600 area, oh man, that from here to 1600 to 1602 to be exact, won't take a huge amount of strength. It'll take, you know, some building of cause, but it's not going to take something huge. Over that level, it is. But guess what? You're at 1200. That's $400. That's 33%. And the physical and what you'll see in the actual equities, the equities are going to have some real juice underneath them. Pretty wild day out here, though. Bottom line, they couldn't blast it down. Guess what? And the bearishness is out there, and it's going to be 6 months, 7 months before folks really get their head wrapped around what it is. In this particular case, you had the technicals, the fundamentals, a setup. It's all set up, and the bearishness is the best. There's no two ways about it. Bond market. Let's go over that bond market. First, we'll take a look at the 10-year TYH4. So the 10-year out here today, she backs down with 342,000 contracts. That's still light volume going into basically almost 1 million contracts. 30-year, same deal. You stay right there, folks. It's Tom O'Brien. This is TFNN. I do wish all you Tigers and Tigresses an awesome 2014, folks. We're going to make it a great one. The Dow finished up 72. Nasdaq up 22. S&P's up 11. We're going to be right back.